Well, the centerpiece of the AI revolution are still the chip companies. But which chips do you want to buy on the dip? Today's Countdown Closer thinks that you need to focus on the supply chain of AI. Let's bring in Pence Capital Management Chief Investment Officer Dryden Pence. He has $3 billion in assets under management. And what are those?
Well, basically, these buildings that you just showed, they're going to be full of the following things from the following companies. TSMC is probably the most important company in the world because it makes 90% of all the GPUs that is going in to power AI. This is the infrastructure of AI, and it's what's absolutely required. ASML is a very key company to that because they really control 100% of the extreme ultraviolet light lithography machines. You can't make the chips that TSMC needs to make unless you buy equipment for ASML. And then the next big company that you have is Broadcom. Broadcom is kind of the picks and shovels of all of this, and they make not only a broad set of chips, but they make a set of chips that are customized to the things that we need in the future. So those three companies that have tremendous demand and are absolutely essential at the choke point of this AI revolution are ones that are dominating. So you have lots of companies buying their stuff, but they've got to buy it from these three. And that's why we think that they have long-term futures.
No, and one of the things you point out, it's astonishing to me, 700 million people use ChatGPT on a weekly basis. 700 million people. That's an incredible number. Unbelievable. Let me get your take on the markets real quick here. S&P 500 in particular. You were one of three guests today on the show that are incredibly bullish on the S&P 500. But what you say here, I think, is so interesting. Across the cutting cycles, Fed, the S&P 500 averages an annual rate 14.9%. If you take out a recession out of that story, the pace is 25.2%. What's your call for the end of the year?
Well, we're not in a recession. We don't see one coming. So we think that this cut cycle is going to be extremely stimulative to the market over the next year and over the next 2 years. So what you have is you don't have a recession. We're not recovering from a recession. We've got a strong basis of the economy going forward, and we have a Fed cutting into it. So we think the example is going to be over the rest of 25, 26, moving into 27. We're very positive on the markets because it's all about earnings. And companies that have to borrow are now paying less. All that goes accretive to earnings. Interest rates go down, costs go down, earnings go up. And so we think that earnings projections for the next 2 years are going to continue to be beats, and we think that's good for the markets.
Very bullish. Dryden Pence, we love it. Thank you so much, sir.